you still think price moves random, this video will change that. Because every move you see, every candle, every spike, they are all tied to two simple objectives, which are rebalancing and seeking liquidity. They trade the market, I trade my namesake. My name is Gold. I am not just a trader, but I'm a trader who trades only her namesake, gold on gold. Today, we're breaking down one of the most misunderstood parts of market structure: imbalance and the gaps that the institutions leave behind. Once you understand this, you will start seeing why price returns to a certain zone again and again. Now let's get into it. What is fair value gap? So fair value gap, FVG for short. And FVG is basically where price moved too fast, leaving inefficient gaps between the candles. Price often comes back to fill it, balance it, then continues the real move. So this is what an FVG looks like. We have three candles involved: the first, the second, and the third candle. This right here is an FVG. You can see that the top of the first candle does not touch the top of the last candle. So you see this gap here is the inefficient gap that price has left because of the speed it used to sell downward or to sell upward, but in this case to sell downward. Because of the of how fast price moved, it's left this inefficiency behind, which is fair value gap. So it's when the first candle and the third candle, there is gap between them. Once there is gap between the first candle and the third candle, that is where you have your fair value gap. So this area, let me use my can box. This area is your fair value gap. And then the middle of this fair value gap, this 50%, this center line, is your consequent encroachment, CE for short. Most fair value gap always taps in to the consequent encroachment before the next move downward. Now let me show you what is not a fair value gap. This right here is not a fair value gap because the wick of this candle already tapped into the second candle. The wick of this candle already tapped into the second candle. So this is not a fair value gap. Price does two things in the market, which is seeking liquidity and rebalancing imbalances, which is fair value gap. Fair value gap, you can call it fair value gap or imbalance. Everything else, structure, entries, patterns, they are all ways of just showing those two movements. When you start reading price from that perspective, the noise fades and the intent becomes clear. So under this FVG or imbalance, we have buy side imbalance and sell side inefficiency, which is BC. This right here is BC. This right here is SIBI. We have buy side imbalance and sell side inefficiency. And we have sell side imbalance and buy side inefficiency. They describe which side of the market got skipped when the strong move happened. So let me do something. Um, this, this. When you see price shoot up so fast that sell orders were left behind, that is BC. Right here is BC, and right here is CB. When price dumps quickly and buyers don't get filled, that is CB. In all, don't stress yourself with BC or CB. Just know that this is a bearish fair value gap, or a CB. It takes place when we are in a downtrend. So don't confuse yourself with CB, just call it a bearish fair value gap. And this is a bullish fair value gap. It happens when the market is buying. So if you're confusing yourself with BC, just call it a bullish fair value gap. Don't complicate things for yourself. Another thing we'll be looking at is be looking at BPR, liquidity void. Be looking at volume imbalance. So these are also other gaps that the institutions leave behind, and oftentimes they come back, fill it, and then the real move begins. So we'll also be looking at BPR, which is balanced price range. Let me write it. BPR. So we'll be looking at BPR, balanced price range, liquidity void, and volume imbalance. Now, liquidity void is when the price, when market opens with a gap, like there is a void there is no wick, there is no body. When market opens with a gap, that is liquidity void. Then volume imbalance is when, let's say, this is the opening price of a candle, this is the closing price of this candle, the top is the closing price of this candle, the top right here is the closing price of this candle. This next candle was supposed to open at the same spot that this candle closed, but what happened? It opened below. If it opens below, that is a volume imbalance. We will check all that out on the chart. Then balance price range is when, let's say, there was a fair value gap in this area, that price, there's a fair value gap in this area, that price broke through it. Price broke through it, and then it created another imbalance just right beside it. I will explain all that while we go to the chart. Let me show you in the real chart. Here on the chart, we can see, let's start with this. Let me use the 4 hours. So here on the chart, let's start with an FVG. You can see that price, this candle, this is the first candle. Then this candle is the second candle. This is the third candle. This is the third candle. You can see that the wicks of the candles are not touching. You can see that the wicks of the candle are not touching at all. This is what you call a fair value gap or imbalance. And let me know, is this a buy side? Is this a BC or a CB? Let me know in the comment section. Is this a BC or a CB? I hope you dropped the answer. Now, this is a BC. Why? Because this is a buy side imbalance and sell side inefficiency, because the buy went up, leaving sell others. Yeah. And you can see how price came neatly, tapped into our imbalance and bought massively. So this is an example of a BC. Now, let me show you a CB. This is the wick of the first candle. This is the second candle. And then this is the wick of the third candle. Never you forget that our FVG, yeah, it's comprised of 3 candles, 3 good candles. So the first one and the third one, once there's a gap between them, that gap is what we call a fair value gap. Looking at this is our fair value gap. This right here is the imbalance that happened here. What the price do? Price tapped into it, pushed down a bit before it disrespected it. Yeah. So this right here is a CB. This is a CB. Sell side imbalance, buy side inefficiency. Yep. Let me give you a few more examples. Now I saw let's do this before we move. I saw a void here, yeah. So this is an example of liquidity void. You can see there is gap between them. There is gap between these two. So right here is our liquidity void. Majority of the time, price uses some of these voids in opening to rebalance and then keep pushing. Yeah, this right here is liquidity void. Let's check for more. Let's check for more. Now this is another fair value gap. So you can see how price came in, tapped in neatly, using it to continue. You see the consequence encroachment. I told you that most fair value gap, the price always, not always, majority of the time uses the consequence encroachment, CE for short, uses the consequence encroachment for the buy. That's why you see most people that trade FVGs, they are always setting their limit at 50% of that FVG. Why? Because majority, 90, maybe 90 is too high, 80% out of the time, price always uses the consequence encroachment for more push to the upside. And something else I want you to know about an FVG is that we have valid FVG and then a breakaway gap. Now, what does that mean? Look at this FVG. You can see that this is where the wick is. And you can see that this candle closed inside the wick. Now, that is a valid fair value gap. This is a valid fair value gap. Now, look at this. Let me show you another one. You can see this one. You see the wick. You see the body of the FVG. Let me show you the FVG. So you can see there's an FVG here. But you can see the body of this candle. The body of this candle closed above the wick. This is what we call a breakaway gap. Majority of the time, price does not come back to this FVG. This kind of FVG, majority of the time, price will just ignore it and use this valid one. But do price always? No. At times, price uses breakaway gap, because on the 4 hours it might be a valid fair value gap, on the 1 hour it might be a breakaway gap. I always say make sure that you are not focused on one time frame. Make sure you can switch anytime to check your bias and confirm both from the higher time frame and from the lower time frame. Here again, you can see. Now, another thing is you can see this FVG. You can see this FVG. Let me use our gun box. So you can see this FVG, the price left behind here. Now, you can see that from this week, from the week of this second candle, you can see that this body closed above. But what happened? Price still used this FVG. Why? Let me tell you. Now, if you check this, let me use this guy. If you see, you will see that the wick of this guy, the wick is bigger than the body. The wick of this guy is longer than the body. That is a respect candle. We don't know what respect and disrespect candle means, but that means that the rejection, the sellers the buyers push this price to up to this point of the week, but the sellers pushed it back down here, showing you signs that sellers are present here. So you can see that the body of this candle, the wick is bigger than the body. So this FVG is a valid FVG. At times, price might just slightly close, the body might just close above the wick, but just look at the wick and the body, which is bigger. Once you notice that the wick is bigger than the body, know that that FVG is a very valid FVG. So when you see a breakaway gap, and then you see a valid FVG just below it, just know that that breakaway gap is going to be a trap for that valid FVG. I think something like that happened on the 4 hours. Let me check the current price action. So I saw this, guys. Now this right here for me was the valid FVG. So I was expecting this FVG to hold, but immediately this FVG got disrespected. I was not interested in this FVG. Why? Because it's a breakaway gap. Look at it. The wick of this candle. Let me show you. The wick of this candle. This is the wick, and you can see this candle, the body closed way above the wick, and there's no wick rejection. So I was not interested in this FVG at all, because it's more of a breakaway gap than a valid FVG. Also, you can see here, this is a bearish one. See the first candle and the third candle wick. You can see here, this is an FVG, but this is a breakaway gap. Why? Say the body closed. The body closed below the wick of this candle, and the rejection, the wick and the body is bigger than the wick. So to me, this right here is a breakaway gap. I'm not expecting price to tap into it and sell. Okay, so let's check for more examples of this FVG, and then we'll go into BPR. BPR is easy to understand, very easy to understand. You can see this FVG right here. You can see this FVG right here. You can see the pullback. This to me is a valid FVG. Why? This closed inside the candle, the second candle. It closed inside. So this is a valid FVG. Price tapped into it and then sold for a bit before it disrespected it, showing you signs that that is a valid fair value gap. Now see another one. You can see this candle that it's closed inside. So this is not a breakaway gap. This is a valid fair value gap. Now the price comes to our consequent encroachment. Yes, price used our consequent encroachment. So This was a valid fair value gap overlapping with our structural area, and then price used the consequent encroachment. This is a superb FVG. Yeah, superb, like superb. Mwah, mwah. This is an FVG third candle. This is an FVG. You can see how price came neatly. Can see how price came neatly, tapped into the FVG and sold. Here again, price created another FVG. This is one. Make sure that the wick of the first and third candles are not touching. You can see price tapped into it and it sold yet again. This one tapped into the consequent encroachment and then it sold, taking out the low. All these are highlighting are valid FVG. Now let's check for breakaway gap. So right here you can see this right here is a breakaway gap because you can see how price closed massively above it. But this right here, this one is a fair value gap, valid fair value gap. Majority at times we still trade. I trade breakaway gaps if I see the level at which it is and if I see liquidity close to it. Yeah, of course price respect breakaway gap. See here, you can see this is a breakaway gap. This is a breakaway gap and price tapped into it and bought. Price respects breakaway gap, but majority of the time those gaps are always traps. Yeah, they're always traps, especially when you see a valid fair value gap. That's something like this. You can see the wick is bigger than the body. This right here is a valid fair value gap, and you can see price tapped into it and then bought before price tapped into it and then bought before the dump started. Yeah, so always be on the lookout for this, for the breakaway gap and the valid fair value gap. Now let's go for BPR. Let me show you an example of BPR, which is balance price range. I told you that BPR is when two fair value gap overlap. Like here, this is a fair value gap. Yeah, so this is a fair value gap, and then when we stretch it out, we can see that it overlaps with this fair value gap. So if you have like a big fair value gap like this, fair value gap as wide as this, and you're wondering where can I take the trade, and then you see just another fair value gap just beside it, you should know that, oh, this is a balanced price range. Price is likely, not always, price is likely going to use this BPR to sell. And here what the price did, price tapped into that area and sold. Let's look for another example. This is another example. This is price here. This is a fair value gap. This long one also is another fair value gap. Now what the price do, you can see where the two fair value gaps overlap, just this area. And what the price do, price tapped into it, touching the consequent encroachment, and then it pushed lower. So take note of this. When two fair value gap overlaps, majority of the time price will come, rebalance them, and then continue with the move. We'll look for one more example of balanced price range before we'll now move to look for an example of liquidity void and volume imbalance. So here is another example. You can see how price neatly tapped into it. It even tapped past the consequent encroachment, and then price started the move. This is a BPR, two FVGs overlapping, and price rebalances and then starts moving. Now let's look for liquidity void. Now this is liquidity void right here. You can see these 2 weeks, the space within these 2 weeks. We can see here there are gaps. This is the week. This is a week. This is the second week, and there is gap between them. So this is what we call liquidity void. When there are gaps in opening, we call it when you say the market opens and it opens with a gap to the upside or to the downside. Now that is liquidity void. Nothing happens there. You will just see that there is gap there. Majority of the time, the market will come fill it up before it moves. Now, here is another example of liquidity voids that market came to fill. See, this is liquidity void. Market will majority of the time come fill this void before it moves. Yeah. Now, this is another example of liquidity void. What of volume imbalance? When the opening of a candle and the closing does not align, because normally this is how price works. You can see this candle. See this candle. This is the open. This is the closing of this candle, and you can see the bearish one. You see that it opened right where this one closed. Yeah. Now you can see the open of this candle does not align with the closing of this candle does not align with the opening of this candle. This is volume imbalance. When the opening, there is gap between the opening of the candle and the closing. Same thing happened here. The close of this candle is not the same with the opening of this candle. So this is volume imbalance here. And then you can see this our FVG also got respected. It's a valid one. The same thing happened here. The opening of this candle does not align with the closing of this candle rather does not align with the opening of this candle. Look at the others. Once this one closed, this one opened almost immediately. Yeah. See this one. So once this one closed, this one opened immediately. That's how it should be. But once you see this one closed here and this one went up to open, that is volume imbalance. When there are super fast movements like that, it happens in the market. See the valid FVG, price respected it and pushed down. That's why I basically trade mostly FVG. So these are gaps that the institution leave behind. They are leaving their footprints behind so that you can as well align, or when they come back to fill that imbalance, you can join the real move. So if you understand that price will only rebalance the imbalance and seek liquidity, you will not be chasing price. You will start reading the intentions of price instead of chasing candles. Don't just trade this blindly. Make sure you watch my video on trading range so that you will know where to buy and where to sell. So I hope this video helps you understand better between FVG, SIBI, BISI, liquidity void, and volume imbalance. If this helped you, let me know in the comment section. So for now, adios.